Scott. Welcome back to the dive.
Well, thanks very much, Cassandra. Nice to be here.
So, we've seen some volatility in the equity markets as of late, largely tied to interest rates. Are you bullish or bearish on the broad market as we see vaccines start to roll out?
You know, I was really of the view that we were in a V recovery post the initial COVID shock, and I fortunately went long. A lot of people talked about it being an opportunity of a lifetime, and that was certainly my view. And the reason I had that view was really simple. I was fortunate enough to be up in cottage country in Muskoka, a couple hours north of Toronto, during the early parts of COVID in the late spring and early summer, and we hit, unfortunately, a rock with that destroyed one of the motors on a boat, a ski boat. And I love to water ski.
Oh
And when
man.
I called the marina, the guy said, "Oh, we're all sold out of the motors. We just sold out of them all. You can't even get them." I said, "What?" And you could barely buy boats, motors, sea-doos, hot tubs, etc. Now, it made sense that in a stay vacation construct of this new world where you couldn't fly to Europe and go to other places, people would invest in luxury related items that were about staying at home and enjoying yourself. That wasn't the first instinct. If you looked at BRP, the spinoff from Bombardier many years ago that makes Sea-Doos and things of that nature, that stock went from $75 down to the low teens. Now it's past the COVID pre-price, but that quickly became apparent. And so I went long a lot of stocks, but and we've seen the V, I think, largely V recovery. They talk about a bit of a K recovery. That's certainly an element of society. Is obviously, if you're in the restaurant business, if you're in the entertainment business, you're in the venue business, it's obviously been devastating for the people that own those businesses and the people who work in those businesses. But I've been much more cautious of late, simply because not about really interest rates, Cassandra. I kind of hear that argument, but 1% 10-year rates, 2% 10-year rates. I appreciate the impact on markets, but to me, I think the more broader themes are what will drive markets, and I'm bullish longer term, but a little more cautious in the short term. I was expecting a pullback. We've seen a little bit of that, and it wouldn't surprise me if we continue to have some real choppy times.
So, do you view inflation as a risk moving forward?
I'm long some gold stocks and silver stocks, but I'm not sure I buy that inflation's coming. This has been talked about for the last 15 years. There's a lot of pressures that kind of counterbalance that theme, and also there's a pretty big incentive by central banks around the world to keep interest rates low. If you think about how much debt has been incurred to support the economies and individuals through this pandemic. That's okay when you're paying 1% and 2% in long-term bond rates. I mean, okay in the sense that you can service that debt. But if rates were to go materially higher, this debt thing becomes a real serious issue. So never say never, but I just don't believe we're going to see materially higher interest rates kind of ever in our lifetime. I know it's a pretty bold thing. I might regret that being that's my sense. So I actually think though those fears around inflation or around what's happening to fiat currencies, I think they're manifesting in real time into the flow into cryptocurrencies and Bitcoin in particular. And the young people, you say to them, "Would you buy gold?" They go, "What are you talking about?" Some of the metals and silver that have industrial applications and applications involved, whether it's lithium or other things in terms of batteries and things that are part of the forward-looking economy, the green economy, or silver for iPhones and things of that nature, they make sense for those macro themes. But I think we're going to be talking about Bitcoin and other cryptocurrencies as opposed to gold, as people think about safety and debt and inflation and those major themes.
So, you're talking about investing in all sorts of small cap stocks. Curious, what are your thoughts on crypto and Bitcoin related companies?
I've been talking about it, I'd like to say at dinner parties, but it's more at Zoom sessions these days, that I'm not sure I've ever seen something so interesting as the dialogue globally with respect to what's going on with Bitcoin in the following sense. Really, really smart people, a lot smarter than I am, think that there is zero value in Bitcoin and we're going to wake up someday and it's worthless. And really, really smart people think it's going to $1 million per Bitcoin. Obviously, what makes a market is I'm a buyer, you're a seller, and stocks can go from $10 to $20 or whatever. But this kind of binary thesis about this new asset class is just intellectually fascinating. My own thesis has been pretty consistent for call it the last 5 years since it's been kind of a topic du jour. And it's really simple. When somebody like Amazon, and it's kind of quasi happening, decides that Bitcoin's completely fungible in their construct, meaning, I can buy a table, a chair, a subscription, whatever I want, with Bitcoin in a very easy way to do it, where I'm not pulling, my Bitcoin out of cold storage and my wallet and kind of the stuff. And it's getting easier and easier to do this kind of stuff. That's when I think there's just no reversing this trend. So I think it'll be very, very volatile. I went long, and in a club I'm in, called Tiger 21 with a bunch of guys, and definitely not the smartest guy in the room with these guys by any stretch. I picked Bitcoin as the number one asset class for 2021. That was in early December. The coin was, $21,000 or so. Obviously, I look, reasonably smart today, but that, it's going to be very volatile. That thing can fall in half in 5 seconds for a variety of reasons. But there's just so much momentum. And if you think about $1 trillion market cap for Bitcoin and the flow of capital and how much money's in gold equities, I think the number is 8 trillion. You don't need a huge shift, and that trend can really continue. So I think everybody should have a little bit of cryptocurrencies, whether it's the Ethereum or the Bitcoin. I'm not sure I'd buy what's the one, the Dodge coin. There's some of these things that are kind of kitschy, but these main ones that have the ability to either be fungible as a currency, or where there's a tokenization aspect to them, where you get some utility from them, those I believe have a real shot to play a real role. And we may be seeing, and this is, and this is what the pundits in favor of what's happening with this whole asset class, we may be seeing kind of the old economy and the way it's being dealt with, doing this and this happening at the same time, in terms of because it can't happen overnight. So maybe we're just seeing the change in how currencies and how people interplay with currency going forward, happening right before our very eyes.
All right, so given all the recent chatter about GameStop and Reddit, do you think monitoring social media for trade ideas is a valid strategy?
I think it's very, very important. There's hedge funds in New York that, if you went back 10 years ago, their equivalent strategy was they would be looking deep into a supply chain. So they'd be trying to see what's happening in the factories with respect to certain elements of an iPhone, for example. Are more cars coming into the factory because there's more employees, because they're, building more chips to try to get an indication of are they going to sell more phones? What's happening? And I always felt that research was very justified. Some think, well, that's not fair. You're counting the cars in the parking lot. I don't really get that. Isn't that the essence of taking the extra step with respect to research? Social media, 100%. These are trends. I mean, I'm a big believer in charting and stock charts. I don't base decisions on charts, but I look at a chart before I make a decision, because stock charts are simply psychology. And that's why people talk about resistance levels and support levels and head and shoulders and reverse head and shoulders and breakouts and things of this nature. And if we had more time, and not that I'm an expert by any stretch, but I love when you start to talk about the themes around charting and what they mean in respect to human psychology. And I think social media is the same issue. I mean, you need to know what's the underbelly of trading activity talking about. What are their themes? What are they thinking? Even let's get the big bad hedge fund that's shorting a stock, and let's act like an army and we all buy 100 shares to move GameStop to penalize them. Hey, that's the world now. And guess what? There is a theme around, you probably do have an advantage in shorting as a big hedge fund. And by the way, the regulators need to do something about this. You're a hero if you come out and say, that some stock and some management team are terrible and they're overstating this and overstating that. And as far as I can see, you don't need to prove any of it. And guess what? In this market, especially be a result of social media, stocks will collapse. The guys cover their short and they make money. You go the opposite direction and say, I believe this company is going to the moon. The regulators are knocking on your door. So the regulators are going to really have to step in with respect to short selling. You're in trouble if you uptick a stock at 1 minute to 4. Well, you downtick a stop, nobody's calling you. Well, that's what the short sellers are doing every day. And I'm not talking 1 minute to 4. They're doing it 1 millisecond before 4 o'clock. And so this is what social media really, in that narrowest sense, brought out in GameStop, that there's this wider spread view that let's democratize. I mean, this is what Robinhood talks about, and it's fascinating. I think the fact that GameStop, has kind of had another resurgence here with his stock price is great. So it wasn't just a flash in the pan. And I think it's really important, this theme of social media and being on top of it as an investor. And if you're a corporate issuer and a CEO and you're responsible for it, what's happening there and how do we play a role in educating the world about our company and the trends that are influencing our outcomes.
Mm-hmm. Okay, so you get access to a lot of private companies in Canada. With all the capital that has flowed into the small cap tech names, do you think the Canadian venture markets will start to see some more tech deals go public?
Well, the last year has been the most prolific and dynamic and exciting for Canadian technology companies since I've been alive. I had the good fortune of building as chairman and CEO what became the number one technology investment bank in Canada, Yorkton Securities, in the late 90s. And we rode the technology boom. And our first year revenue was 15.8 million. And 5 years later, we did 244 million. It was all publicly disclosed. And we were lucky. We rode the incredible technology, the first wave of the internet, really. They call it Web 2.0 now and on our way to Web 3.0. But that first wave when, not long after I joined the firm, Netscape, you're too young to even know what Netscape is, but it was really the first browser. So now you're saying, oh, I use Chrome or I use Safari or whatever. Well, the first one that was kind of ubiquitous was Netscape, and it went public, and it really allowed what existed. The internet had been around for about 10 years, but there was no way for everybody to participate and to search and to be part of it. And that really was the, kind of would open the floodgates with respect to widespread use. Canada initially just didn't have the breadth and depth of venture capital money or a talent base. And so companies that got built here would have to import talent from the United States and usually get sold fairly quickly. But that's changed really dramatically. And of course, if you can look at a Shopify or a Nuvei or a Lightspeed, the Descartes that were actually born in the late 90s and become super powerhouses, OpenText, obviously being, there's just so many great Canadian success stories. And I do see a tremendous amount of product. I love investing. It's obviously easier to invest in, publicly listed companies for liquidity purposes. But I do invest in a ton of privates, and you're starting to see them. The Dye & Durham, incredible success story. The Pivot Tree went public the other day. These are great, Canadian technology company. And interestingly, this is what interesting. The fact that Dye & Durham, Canaccord took the company public, priced it really well. This is a stock that went public at $7.50 a share last year, and it's probably raised, I'd have to do the math, but I bet close to $500 million in the last 9 months. Most recently, they did deal up at $50. Stock got to 53 or so. It's trading around 43-ish, and market cap's probably in the $3 billion range. Great management, dominates the legal sector as it relates to document management, has made some key acquisitions in other parts of the world, and all financed. And I'm not saying there's not U.S. institutions involved. I'm certain there probably are in a big way. But there were no U.S. dealers in that IPO. And that was new. That was something that if you really wanted to have a Nuvei experience, it's had a great success as an early public company in the last several months. You needed some of the U.S. dealers. And the fact that this was done without them tells you that this Canadian capital markets has really grown up. And it's all upside from here in terms of being an entrepreneur in this country, knowing you have access to capital if you've got a great idea and can attract people. And no better place to build a technology company in the world than Toronto, Ontario, and Waterloo and the other. And I'm not saying other parts of Canada too. Vancouver, there's other pockets growing up. But it's really simple. The talent is less expensive. There's a bunch of government support, appropriate government support in many cases. I would argue our temperament as Canadians is probably on balance, maybe we're not as aggressive as Americans, but there's elements of our temperament that can allow these companies to be more successful globally, in my view. And yet you're an hour from New York, you're 4 hours from LA, you're an hour and a half from Chicago. The laws are basically the same. It is the biggest export market, the partnerships and channel partnerships, everything are there at your doorstep. It's a pretty unique place to build a technology company.
Okay, so let's talk QU Media. The company just raised $11.5 million. How does the company plan to deploy this capital?
Well, the Q Media story is such a great story in so many respects, and I'm so pleased to have been part of it. I've been chairman from day one. And the quick recap is what we do is really simple. We have an influencer marketing business in Los Angeles. What that means is we get hired primarily by theatrical studios, Disney, Lionsgate, players like that. And I've been involved with Lionsgate from day one. So I've been fortunate enough to have been exposed to that business. And we do influencer marketing campaigns primarily on TikTok to promote their theatrical releases. Great business, great opportunity, but the real torque in the business, the torque and the thing that's got investors excited and has us every day that are involved with the company waking up and saying, gosh, today's going to be a better day than yesterday and a better day than the day before in terms of moving this ball forward, is a channel that we launched in India called Qyou India. And it's a youth focused channel all the way down to about 12 years old, call it to the mid 30s. And, the dynamics, the macro environment, a big believer, you can be the best entrepreneur in the world, you can have the best idea in the world, but the macro environment is going to shape whether this is a success or an uber success. So if you're in the wrong macro environment because that industry is dead for a while, could be the gold business we were talking about that was dormant for 10 years, or could be even Bitcoin that was kind of very quiet for the last couple of years. There's not much you can do in terms of the market kind of appreciating what's happening. But if you're in a macro environment which is working, that's when great things can happen. And what's exciting about Qyou India is the macro environment. India is an incredibly vibrant country, 1.4 billion people coming out of poverty, apparently 3-4 million, 5 million every month come out of poverty. What do you do when you come out of poverty? You buy a cell phone and you buy a TV subscription. We use the word TV, of course. We mean literally a TV channel. Qyou India is available on satellite and cable. Tata Sky is a name. If you're from India, you certainly know about. Tata is the biggest company in the country, kind of like saying you're on Bell Express View or Dish Network in the United States. And I've been to my hotel room in Mumbai, and you turn on channel 210 and there's Qyou India. But it's also available on apps like Shingari that nobody's ever heard of in North America, but Shingari's like a TikTok in India, or on mobile phones. We're with Qyou, spelled GIO, the largest mobile company in the world, recently having attracted billions of dollars of investment from Facebook and Google. Why are Facebook and Google investing billions of dollars in India? It's the macro trend with respect to what's happening in media there. Advertising rates are growing. The income rates are growing. It's a fascinating stat. It's really one of the few countries in the world in which newspaper subscriptions are still growing. Imagine hearing that in a world where we go, what are you talking about? And this television subscriptions, everywhere else in the world are cord cutting, but it's this macro factor of just so many people coming out of poverty that want these basic things and deserve these basic things: newspaper subscriptions, TV subscriptions, cell phones, et cetera. And our target market is really simple. We're going after finding content that's innovative, that's exciting, and that's engaging with digital creators. What do we mean by that? So we're searching literally the YouTube of India and other sources of digital content. It doesn't have to be the most popular, because that you can get easily already. Let's find the stuff that's really been undiscovered. And then we package it. It could be a dance, it could be music, it could be extreme sports, it could be prank, it could be cooking, it could be devotional. Very popular stuff. We've got devotional. The cooking, it's not some guy with, and then you put the onions and then you dice the garlic. These are young, hip Indians. It's all in Hindi, by the way. This isn't English language. The music's going, the curry's going, they're having fun, cooking away. And we package those typically into 24-minute shows. The digital creators, they're just delighted to increase their footprint. So we're not asking them to create new content. Now, we've just started to create some new original content where we're showing kind of the best of TikTok in India. We have high hopes for that show. But we're showing stuff that deserves to be discovered by the young audience in India. And here's what's happened. Our ratings have taken off. So it's been a 3-part strategy: build that channel, get that distribution. We're now, as of today, 650 million homes and devices. By April, it'll be 700 million homes and devices. and our ratings in India have taken off. We're at 4.4, what are called gross rating points. We're about half of our big target, which is the Disney channel called Bandas. We have a very simple, it's audacious, but a simple goal, which is to be the most relevant media brand for young Indians in India. And if we can do that in the next 3 to 4 years, we're going to create enormous value for our shareholders.
Awesome. Well, thank you so much for joining us on the show again, Scott.
My pleasure. Thanks for the time.